Hello everyone, welcome all of members, followers of Kinh Tế and Tài Chính channel. Today we welcome a special guest from Australia, Mr. Tim Waterer, chef, market analyst from KCM Trade. He has been known for many notes on economics and financial markets, recently on BBC Channel New Asia Sky. As an expert of finance, we are honored to host him today and we want to hear his comment on upcoming market movement. Hello Tim, how are you doing today? We know you're very busy lately. Today, can you tell me how your schedule like recent may you share?
Hello, nice to be with you, and thanks to the Economic and Finance channel for the invite. Yes, very busy time in financial markets recently. Investors are wanting to know what's going on, what are the driving themes in the market. So recently I've done a few interviews with the BBC, Sky News, Channel News Asia. So investors, from Australia, the US and here in Vietnam, wanting to very much know what's going on in markets, what to watch out for, looking forward for the rest of this year and going into next year as well.
Of course, it's only a few until the last quarter of 2023. If we want to hear in your opinion, what are the key themes of 2023?
Yeah, this year has been very much all about inflation and interest rates. So we've gone through this period of high inflation around the world, and global central banks have been trying to basically raise interest rates to try and bring down inflation. And there's been some success on that front. So last year, the US inflation rate peaked above 8%. Right now, they're down to 3.7%. In the UK, similar story there. They reached 11% in inflation. They're down to 6.7%. So there's been good progress by central banks in terms of tightening monetary policy to address those inflation levels. But there is some way to go on that front.
Thank you. We know that we always has listened to a very FOMC word. What did the FOMC have to say, and what does it mean of financial market for the rest of 2023?
Yeah, well, that's right. The FOMC meeting that we had recently, that was sort of the big events in the market. And, we're still seeing the ramifications from that, across global markets even to this point. So the key messages that came out of that meeting from the Fed were that interest rates may be going higher, so there could be a November hike potentially. And the other message that came from the Fed is that there won't be as many interest rate cuts in 2024 as the market previously expected. So, this prospect of higher interest rates, that's causing some risk aversion in markets at the moment. So, and the reason that interest rates may go higher is that the US economy is performing better than expected, in the words of the Fed. And also, secondly, we've had a push higher in energy prices in recent months. So the crude oil price, for example, that's up 20% year to date. So those higher energy prices are feeding into high inflation costs around the globe at the moment.
I know that, but what happened to USD and Treasury year after FOMC?
Yes, well, that's right. After the FOMC, the US dollar has gone higher, and so too have Treasury yields in the US. And the reason for that is quite simple. There is basically the prospect of these higher interest rates in the US going ahead, and that's benefited the US dollar from a yield perspective. And in terms of the bond market in the US, the yields right now are at 16-year highs, particularly on the 10-year note there. So that's reflecting this outlook for higher interest rates. So those two assets have been certainly moving about a lot in the last week, and that's having a flow-on effect for the rest of the market as well.
Yes, in our survey, the Vietnam investor love trading gold. And can you tell me what's your take for the gold price?
Yes, well, gold's been on very much a roller coaster this year. The highs have been high, the lows have been low. We saw earlier in the year the gold price, it peaked above $2,060 per ounce. That was at a time when gold was getting a lot of safe haven flow from investors, when there was a lot of concern about US regional banks around in March and April this year. Investors flocked to gold, and that sent it to the multi-year highs in that asset. It's been more of a struggle in recent times, though, for the gold price. Two reasons for that: higher US dollar and higher Treasury yields. So in terms of the US dollar impact on gold, what that does is it makes gold more expensive for foreign investors to buy when that US dollar is stronger. So that's what we're seeing right now. And in terms of the Treasury yield impact, so what happens there is that you can look at gold and bonds as sort of competing assets, both, low risk, low return. In the case of gold, that's a zero yielding asset, Whereas on bonds, currently you're getting between 4 and 5% depending on the duration. So right now, that bond market is looking relatively more attractive to gold, hence why yields are higher at the moment in the US and gold has moved lower. So right now it's trading in the low $1,900 region at this point in time. So as I say, it's a bit of a struggle for gold in the wake of that FOMC meeting last week. So short term, it looks like, there's more, I guess, headwinds at this point for gold, but more medium, longer term, it could be looking a little bit brighter for gold if, looking down the track, US interest rates start to ease off. Then that would probably suit gold.
Yes, that's great key of analytics, Mr. Tim. So what's your outlook for the rest of 2023 and first quarter of 2024?
Yeah, well, I think looking ahead, those themes of inflation and interest rates, they're not going away anytime soon. They're here to stay for the time being. We're seeing markets react to any data which may impact what the Federal Reserve does in the US in terms of interest rates. So any sort of stronger data, that could increase the chances of maybe a November or December hike. So I think that'll be definitely in play. Investors are also looking at things like, the core PCE and other CPI gauges in the US to see sort of whether there's any upward trend in that as a result of those higher energy costs. So I think they'll be still driving forces in the market. But I think the other thing we'll need to look at is what happens with the China story. So there was a lot of hope in 2023 that, Chinese economic growth would be stronger than it has been in the post-COVID reopening. But that hasn't translated yet into a stronger Chinese economy at this point. There's been struggles. And as a result, Chinese authorities, they've had to take steps to try and stimulate the economy there. Very incremental, small steps in terms of reducing some of the key lending rates. But I think there's been a few, mildly positive signs coming from China in recent times. Retail sales, industrial production were both stronger than expected. We'll be looking ahead this weekend to see what the manufacturing and non-manufacturing PMI data comes in at. If they surprise to the upside, I think that would be good for risk appetite. And that, could translate into maybe some more optimism in the market, in contrast to some of the pessimistic market moves we've seen on the back of the Fed move last week.
Yeah, thank you so much. This is the important information for investors in Vietnam. And once again, I would like to thank you for your sharing and coming today. And I want to see you in the next interview. Yeah, thank you so much. And thank you everyone to hear his comment today after impact the FOMC. And I hope you will have interesting information to trading. Thank you so much.